The whole world moves because of the currency exchange. Oh yeah, without Forex, the world would not work.
Bullish.
Yes! Oh, this is crazy.
No, I didn't think I was gonna get it at first.
You'd be surprised how many people would get that wrong.
Gotta be about to change the profession.
I've had students taking $1,000 to about $130,000 the first 3 weeks, then they'll blow that.
What's your advice if I'm a student? So we weren't woke. We just knew we had to go to school. Man, I should have been doing this instead of college.
No. Ladies and gentlemen, welcome to a very interesting video. Today we're going to be teaching the man, the myth, the legend, Ashton Hall, how to trade today.
I'm ready.
And thank God I'm wearing a hoodie because I'm feeling very small next to the man right here.
You got the beard. You can't have everything, brother. Come on now.
Well, today, so have you ever traded before in your life?
Never.
Ever?
Literally.
You have no experience, you've never bought crypto, you've never done anything?
I see people trading and I'm just like, it's sign language. I see nothing.
Probably like Chinese, like different up and down.
I told my team, I said, if I'm gonna trade, I'm gonna do it with Alex G, and we're here.
Okay, fire. I appreciate that. I appreciate you trusting in me, right? So today we're gonna be teaching you how to trade. I'm gonna literally be teaching you all the basics. What is trading, how it works, how to execute a trade. And at the end of it, you're gonna take 3 real trades. We're gonna go back testing and we're gonna put what I taught you to test. If you catch one of the 3 trades correct, you win because you're gonna be in the profitable. All this math will make sense at the end. But if you get all of them wrong, then you or I will have to eat the world's hottest chip, right? So the goal is to not eat this chip.
We gotta stay away, we gotta stay safe.
So you gotta pay attention to what I'm gonna be teaching you today. So with that being said, are you ready?
100%, let's do it.
All right, perfect. Okay, so when it comes to the markets, there's multiple different types of markets, right? So you're going to have the Forex market, which is short for foreign exchange. Don't mind my handwriting. So Forex is short for foreign exchange.
Yeah.
You also have the stock market. You're also going to have futures markets, and then you're also going to have crypto, right? So these are all very, 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 very different markets, right? At the end of the day, they all represent price in the form of a chart. You're going to see lines that go up and down, and all they're doing is representing what is happening on this specific markets in the chart format. It's all the same thing, right?
Okay.
So once you learn how to read this chart format, you can pretty much trade anything.
Yeah.
Because once you learn how to read the charts, it's just being represented in either foreign exchange, which is for dollars. So for example, here you're going to have, let's say, the euro versus the USD.
Yeah.
So the euro is going to be fighting the USD. The USD is going to be fighting the euro.
Okay.
So think about this as Mike Tyson. And then think of this as Holyfield, right?
Okay.
Both of these guys are in a fight.
Yeah.
But think about this fight as it never ends. It's literally a constant fight that is going down 24/5. So foreign exchange market is open 24 hours out of the day for 5 days a week. It's closed on the weekend, right? So all this is the foreign exchange market.
Yeah.
So Holyfield and Mike Tyson are simply fighting all the time. Sometimes Mike Tyson gets a good uppercut. Sometimes Holyfield gets a gut shot.
Yeah.
Mike Tyson might bite his ear, something like that.
Yeah,
right?
yeah.
So it's a fight that happens constantly. And you're basically going to be betting Holyfield is going to win round number 3. Or Mike Tyson is going to win round number 5.
Yeah.
And there's never a winner. Like the fight never ends.
Yeah.
So you're just basically going to bet that they're going to, one of the fighters is going to win for the next 2 rounds, 3 rounds, 4 rounds, so on. Okay. And that's going to reflect on the market in terms of days. You think the euro is going to beat the dollar for 2 days, for 1 hour, for 15 minutes. You can pretty much break it down as long as you want. Okay. So you think Mike Tyson is having better stamina than Holyfield.
There's only 2 fields, euro and then USD.
Yeah, for the foreign exchange, this example, yeah. But there's endless
for Forex.
Yeah, for Forex. You can have the GBP USD, which is the pound versus the dollar. You can have USD JPY, which is the dollar versus the Japanese yen. Yeah. It's endless amounts of different markets, but the basis is the same.
So when someone says they do Forex, they're trading.
They're trading, yeah.
What do you do for a living? Forex. They just trade.
Yeah, but at no point do you ever own any one of these currency pairs. Ever. All you're doing is just betting that one of them is going to be stronger than the other for a short period of time or a long period of time. Okay. That is Forex trading. Yeah. Right? Stock market is a little bit different. When it comes to the stock market.
What's the best one?
Forex.
Forex?
Yeah, I'll explain to you why, right? So
because you can make the most?
You can make the most. It's open the longest, and you can have the lowest entry barrier. So you can start off Forex with $100, and you have leverage with a 1 to 500. So this is very important, and I'm gonna explain why.
Yeah.
So with Forex, you can start off with as little as $100, and you have buying power of a 1 to 500. So meaning this $100, you have a multiplier of 50 on it.
Okay.
So this really is about $5,000 in terms of buying power. So you can trade as if it were to be much higher in your account.
Yeah.
Now, obviously that turns to more risk, which this can get lost a lot easier if, for example, if you were to have a leverage of a 1 to 50.
Yeah.
But the opportunity to make more money is a lot greater because you have more leverage.
Yeah.
When it comes to the stock market, the minimum entry is going to be around anywhere from $10,000 to $25,000. And the leverage can be limited to a 1 to 25. So you're really limited to a very small amount of money of the money you put in.
Yeah.
And you're going to require a lot more money to get put in. And then the stock market is 5 days a week from 9 to 5. So your odds of trading, your hours of trading are a lot less.
Yeah.
In the Forex market, 24/5. In the stock market, 9
A
to
lot
5.
of somebody hit the stock of the Forex.
Because some people like the idea of trading the stock market because they read a lot of fundamentals, right?
Facts.
So the stock market is very influenced by fundamentals, right? Because the fundamentals are, so the stock market are companies. You're buying into Apple, you're buying into Tesla, and there's more physical things in a way. There's more reports that you can look into.
Yeah.
And it's almost more of like a longer term play. You can trade it on the day trade as well, but people like reading the fundamentals. When it comes to the Forex market, it's a lot more technical.
Yeah.
Because it's just currency markets, right? So you're just basing it off of patterns in the markets. The same patterns could happen in the stock market, but it's much more influenced by fundamentals, right? So this right here is just a quick overview. When you have futures, commodities, all this other stuff, this is going to be stuff like gold, you have silver, you have oil, and you can also have NAS 100. So this is basically, you can also trade futures in the Forex market.
Okay.
Same thing. And then crypto, obviously you have your BTC, you have your ETH, Solana, and never ending amounts of crypto.
Okay.
If I were to rank these in order, for me, Forex would be number 1, crypto would be number 2, futures would be number 3, and then the stock market would be number 4.
So you do more of Forex.
Foreign exchange market, yeah.
And most people would agree with that.
I could argue that most people could agree with that, yeah. There's a lot more volatility, there's a lot more options, there's a lot more patterns as well. And to me, there's a lot more reliability simply because, yeah, it just simply makes more sense. And from my humble experience. But lately, I've been trading a little bit of futures, and I don't really like trading crypto. But yeah, this is just, want to give you like an over idea of all the different type of markets that there is. Now we'll get into a bit more of the technicals now.
Okay.
Do you have any questions on this so far? Any concerns?
We're ready to hit big, man. So basically, you're just betting on what's going to be up. It's pretty much just like sports betting, like, but the game doesn't end.
The game doesn't end, and there's real patterns. Well, I mean, I guess you can say there's also patterns with sports betting in a way.
Yeah.
Like, let's say you see the team line
As
up,
momentum or something.
yeah, or like they do their lineup in a specific way. You see the market do a lineup in a specific way. You can predict that they're going to do a run or they're going to do a pass.
And you get paid off of them doing good or bad, or you lose money off of them doing bad.
The sports team or the trading market?
Trading.
Yeah, correct. Yeah, I mean, you're basically betting.
So where does the money come from? Like, if I'm betting that you're doing better than someone else, who's paying me?
Yeah, so the money's coming from the market. So someone else is losing that money indirectly.
Really?
Yeah. So like someone else is getting.
So if you're paying that they're doing good, I'm paying that they're doing bad.
Correct. Yeah, there's always.
If I win, your money goes to me. Kind of.
It's in the air, yes, but technically yes.
Wow.
Yeah, like somebody. There's always going to be someone on the other side.
So it has nothing to do with the two parties. The money is not coming from them.
No.
The money's coming from the people who are trading.
Correct.
So you're just trading against other people who are trading.
Correct. Yeah,
That's
but
crazy.
Okay, but this is something that I wanted to add.
How is that legal?
Yeah, because
That's just like gambling, right?
no. So the Forex market is a $6.7 trillion market. Not billion. Billion is down here.
6.7
million.
Why? Who made this popular?
Because this is the currencies of the world. Like this is the economy of the globe. You know, like you have the euro, the pound, the dollar, the Japanese yen, the Russian dollar, the noggin, the Swiss franc. Like,
and people just became obsessed with what's going to be up.
You're basically betting on the dollars of these countries. So this is the biggest market because it's literally the dollar of a country. So this is much bigger than just the stock market, because the stock market is just the US. This is just $1 billion market. This is a couple $1 billion market. No comparison to a $1 trillion market. So there's a lot more opportunity and volatility.
This is the entire world.
This is the entire world. This is just the US. The US is very small compared to the world's economy.
Do you think Forex trading changes anything to do with like how the world operates?
This is how the world operates because of the foreign exchange. If not, it would never operate. Yeah. Like the whole world moves because of the currency exchange. Correct. Like money being transferred from one country to another. The stock market is just within the US. Right?
So you think the world needs Forex?
Oh yeah, without Forex, the world would not work.
Really?
Yeah, you need to exchange currencies all the time. When people travel, you go to the airport, you know, you see that currency exchange at those spots. Yeah, when you go there, you're exchanging currencies all day. That's what makes the world go round.
So does this field make the most millionaires?
I think so.
Really?
Yeah, 100%.
So isn't there a fact? There should be a fact.
I mean, we can search it out. Let me see. Does the Forex market make the most millionaires? Yes, the Forex market can make you a millionaire. Many successful traders have achieved significant wealth through this expertise and strategies in currency market. For instance, Ray Dalio is recognized as the richest Forex trader with a net worth of $14 billion, and George Soros with a net worth of $8 billion. These are the richest traders in the world. You know what's funny? I knew they were the richest traders in the world, but I didn't know it was because of the Forex market.
Oh, really?
Yeah, I just found this out right now. Dang. Yeah, shout out to you.
Come on. Google, shout out to Google.
All right, so when it comes to trading any type of market, futures market, stock market, crypto, for anything, you're going to need 3 main things to determine if entering the trade makes sense.
Yeah.
Doesn't matter what you're trading, doesn't matter if you're driving, if you're sleeping, it doesn't matter. You just need these 3 foundations to take a trade. Okay. The simplest analogy that I can make this to is if you're gonna go surf, right? When you go surf, you need 3 things. You need an ocean, you need a surfboard, and then most importantly, you need the right wave to go surf.
Yeah.
Those are the 3 things that you need to surf.
Okay.
When you go enter a trade, you need 3 things. You need the trend, you need an area of interest, and you're going to need your entry signal. So trading is very similar to surfing, if not exactly the same. But you're not getting risk of getting eaten by a shark, right? So trading is like surfing. 1 is going to be trend, which is going to be the ocean, current. 2 is going to be area of interest, which is going to be the beach. And then 3 is going to be entry signal, which is going to be the actual wave to enter or to surf, right?
Yeah.
This first one is the trend, which is how is the market moving?
Yeah.
Is the market moving up or is the market moving down? Based off of the trend, you're able to understand if you want to buy or sell.
Okay.
A lot of people, when they just look at the market, they just say it's going to go up or it's going to go down, but they can't really tell you why. So there's a way of identifying the trend, and that's going to be based off of market structure. The market structure is literally the heart of the market. Without the market structure, the trend, currency, like nothing exists.
Yeah.
So this right here, where you're seeing these triangles up or down, these arrows up or down, that is market structure. Picture that as if it were to be the trail of when somebody is walking in the snow. You know, when somebody walks in the snow, they leave these little footsteps.
Yeah.
This is the footsteps of the market when it's going up or when it's going down. But instead of it being called footsteps, it's called market structure.
Okay.
So picture the trend, the market structure, as the waves currents either going east or going west, for example, right? So those are terrible forms of waves. So you have a visual. When you're gonna go surf, you're either surfing to this side of the coast or you're surfing to this side.
Yeah.
But you have to follow wherever the ocean's going or the current's going, right?
Yeah.
area of interest is going to be literally what it's called, area of interest, which is a zone where it's going to make the most sense to enter the trade. Because just because you see a market going up or a market going down doesn't mean you just jump into the market. You need to wait for it to get to a specific zone.
Yeah.
Right? So that specific zone is where you're going to enter the trade. So let's say the market is trending upwards, and yes, even though the market might be at a high point, you need to wait for it to come back to this area of interest for then here to you take the trade.
Okay.
So this area of interest is the most common mistake traders make when it comes to patience. They don't wait for the market to get back to this area. When it comes to the ocean, it's the beach. Because a lot of traders, a lot of surfers, when they go to the beach, they think that just where you park your car is where you can surf the wave. No, you have to walk down a beach a little bit, maybe walk a little bit more west, a little bit more east, or even surf a little bit out so you catch the right area where the waves are being formed.
Okay.
You can't just surf off of the beach. You can't just surf wherever you want. It's wherever the waves are being formed. So you need to make sure that you're at the right
spots.
Correct, at the right area on the beach. So this is probably the sand, where this is my version of a palm tree. So if these are the waves, you need to make sure, if you're right here, you need to make sure that you go to where the waves are.
Yeah.
You can't just surf from wherever you want. And then lastly, most importantly, is the entry signal. It's the reason why you enter. Entry signals can consist of many different types of things. They can consist of doji rejections and engulfing rejection. So this is a candle going up or down. This will make sense once I actually show you the technicals of it. But this is the reason why you enter the trade. Same exact thing when it comes to the surfing. You can be on the surfboard, but you need to make sure that you actually see the wave incoming from far and that it makes sense for you to paddle to this wave and kick yourself onto the wave.
Yeah.
So that wave being formed or a crevice being formed from far is what's going to tell you to get onto that wave or that it's ready to go. The market gives you a crevice from far, letting you know that it's ready to enter the trade as well.
Okay.
All right. So do you understand all this so far?
Yeah, for the most part.
Okay. Any questions on this right now?
Not right now.
Not right now? Okay, perfect. So keep in mind trend, area of interest, and entry signal. Now we're going to dissect every single one of these details where it's going to be easier than ever. Just kind of went over the top right now to give you a visual, but this is everything you need to learn to be able to properly enter a trade and understand if it makes sense to take the trade or not. So back to the trading, right? So we got here trading. So the first thing is going to be the trend, right?
Yeah.
So we understand that the trend is also equal to market structure, which is also equal to the heart. This is the pulse of the market.
Yeah.
The market will create a pulse to the upside. The market will create a pulse to the downside.
Yeah.
Now, in an actual heartbeat, it's called a pulse, right?
Yeah.
If you look at spell pulse wrong, pulse. If you look at a pulse of a heart, you see like the ding, ding. That's the pulse of your heart, right? It'll be something like this. It'll be like this. It'll have a spike. That's the pulse of the heart.
Yeah.
The market structure reflects a pulse in the same way, but it's not called a pulse. It's called HH, HL, LH, LL. Probably wondering what the hell is that?
Yeah.
Very easy, right? This is not complicated. It's very simple. HH is equal to higher, high. HL is equal to a higher low. LH is equal to a lower high. And then LL is equal to a lower low, right?
Yeah.
Higher high, higher low, lower low, and lower high. Now, these at no point do they ever go together.
Yeah.
Not all of them. This is the brother, this is the sister. These always go together, these always go together. These go together when the market is bullish. Bullish equals buys.
Yeah.
This is when the market is bearish. When the market is bearish, it equals sells. You can only have, so these actually get split right down the middle.
Yeah.
So a bullish market consists of higher highs and higher lows. A bearish market consists of lower highs and lower lows.
Okay.
you can never have these combined, right? It's just this is this, a boy is a boy, a girl is a girl. Simple. So a bullish market, which would be this right here, when the market is going up, is consisted of, what is this?
Higher
High and higher low.
Higher low.
So when something is a higher high, is that it's the highest high. So this right here would be a higher high.
Yeah.
Because that's the highest point. So what is a higher low? Well, it's the last highest low. Now, if I were just to follow back on this market right here,
Higher high is what you get paid off of.
higher high is just
Well,
where
if you're betting that they're going up.
correct, yes. But like right now, what we want to do is just understand what's the pulse of the market. What's the market structure? Is the market up or is the market down?
Yeah.
And you cannot identify, right, I'm going to write this here. You cannot identify if the market is up or down without market structure.
That's market structure.
Correct.
So basically, the higher high is just showing that it's already high, but it went even higher than its high.
Yes, yes.
Okay.
And it tells you where it is. It tells you it's at the highest point, it's at the lowest point, it's in the middle. This tells you where the market is,
And
right?
that's the graph that you see.
Correct.
So if I see the graph like that and then it goes up, this is a higher low.
That would be a
It's low.
higher. That would be a higher high.
Really?
Because
So if it's like this and then it goes down, but it's like that, but it was up here,
Yeah.
and it's a higher low.
it depends on how it breaks it, and it's all going to make sense right now.
Okay.
Right? Okay. That's a great question, by the way. It's good that you're asking that right now, right? So the higher high, it's obviously the highest point. Now, the higher low is the next spot, which would be this point right here. That right there would be a higher low. All you have to do is follow backwards the last from the higher high. You simply follow it back, and it's going to tell you where the higher low is.
Okay.
So for right now, we're going to make this the higher low. So we're going to do it right here, right? In a much bigger scale, just so it's much cleaner. So this right here is the higher high. This right here is the higher low. Right?
Okay. So the higher high is just the highest point.
As of right now.
Yeah.
Yes. So this market is bullish because of this higher high and higher low. The moment we break below this higher low, this market is no longer bullish. So that was your question on the bearish example, and it'll make sense right now, right? So if this market, for whatever reason, does something like this, it's no longer bullish because it has broken below the higher low.
Bullish is making it that it's up.
Correct.
Bullish
yes.
means it's up.
Bullish means it's up. So as long as we are in between this higher low and this higher high, we're bullish. So this market can have a retracement to here.
Oh, okay.
Yes.
We're still up.
Yeah, right now we're still bullish because we're still in between the higher high and the higher low.
We still winning.
Yeah, if this market does this, cool. We just broke the last.
a higher high.
We have a new higher high, correct. So this is the new higher high. And then the new higher low gets moved to the next higher low.
Alex, I'm ready.
No, hold on.
I'm ready. Come on.
Hold on. Right? So this right now would turn into the new higher low, right? So that's the new higher low at this point right here. Once again, this market does something like this. It breaks above this point right here. This is the higher high. This is the higher low. And as long as we remain inside of this move right here, we will be bullish, right?
Yeah.
So as long as we are inside of this higher high and higher low, we are bullish. So if this market does something like this, you
Bullish.
that is bullish, correct. But you cannot count. So right now, let's say we open up price and we see this, right? So let's say we see a naked price on the market right now, right? We open up TradingView, which is where we analyze the charts.
Man, I should have been doing this instead of college.
No.
I was in college 6 years ago.
Wait,
they didn't teach me none of this.
Wait, what did you study in college?
I studied everything. I just switched my major every semester.
Oh, no. So you
Dropping classes left and right. I should have been in school with Alex. Come on, bro. I should have been right here instead of them 6 years at UCF and Alcorn State. Come on, man.
Do you even use anything that you learned?
Nothing, bro.
No.
I learned nothing.
Yeah.
I was just there just trying to make it to class on time.
Yeah.
It was none of this.
No, bro, I didn't learn this in college either. I dropped out after like 3 months. Yeah, I didn't really make it at all.
I think now people know, like, because back in my day, I'm 30. Back then, if you didn't go to college, Jared didn't go to college, bro. He's tripping. Like, he's a failure. Now it's like if you're in college at this age, 18, 19, it's like, oh, you're getting scammed.
Yeah, because
People know they're catching on.
Yeah. Like it's
Even
more out
like
there.
the multi-millionaires, Alex Ramosi, they're saying school, college is scam.
Well,
crazy.
and, yeah, because like back then when you were in college, there wasn't no social media. People weren't
There was
posting.
no social media, so we weren't woke. We just knew we had to go to school. If we didn't go to school, even if we didn't know what we were doing, we needed to be in school. It's crazy.
Well, yeah, this is gonna save some people a lot
Should
of
have
time.
been here, bro. Straight. All right, let's get it.
All right, so when you come to identify this market to understand if this is bullish or bearish, you can't look at this point right here, right? Because that right there, you can't mark this off as the higher low. It's not a higher low because a higher low mandatory needs a higher high. Mandatory, right? Mandatory, the higher low needs the higher high. So if you mark this as the higher low, you can't mark the higher high behind the higher low. That makes no sense.
This is not a higher low because it's still bullish.
Correct. Yeah, this right
Until
here.
it goes down there.
Yeah, correct. This right here would be the higher low. This right here would be
Higher high.
higher high. Correct. Now, if we delete all this right here, and let's say this market, once again, let's say it does this. This market is still bullish because we are inside of the higher low and we're inside of the higher high, right? The moment this market breaks below the higher low, we are no longer bullish.
Yeah.
This market has what's called shift of structure, S.O.S. So it's S.O.S, one, because it's called shift of structure, but this is really, like this is literally a red flag, right? Because you need to understand that this is now changing, which is very important because it can turn something from buying to selling within a second. So S.O.S is a very big deal because, you know, red flag, sirens going everywhere. You no longer are looking for buys. Now you're looking for sells.
Wait, run that back. S.O.S is what now?
S.O.S is shift of structure. So shift
That's when it goes down. It's under bullish.
of structure. Yes, that's when the structure changes. So this right here is
So
the
this
market
is structure.
Yeah, this right here is the pulse.
This is
a
S.O.S.
Yeah, S.O.S because it's a shift of structure. The market just changed from bullish to bearish.
Okay, even if it's down and it goes up, it's still S.O.S.
Correct, and I'm gonna explain that now. Right now, why? Right. So shift of structure is very important because the market, it's literally giving you the S.O.S that this market is no longer doing what it was supposed to. So right now we know that's bullish. This is the higher low, which is very important. Once this market breaks that higher low, we're now bearish because this market has now just created a lower low, which is over here. When the market is bearish, it creates a lower low and a lower high.
Bullish is still.
No, bullish would be.
It's not breaking. It's still up.
Yeah, bullish would be if it breaks back above this right here. And I'll explain it right now, right? So this is where things get a little tricky, but as soon as you understand this, literally you understand everything if you get this, because this is the pulse of the market. I'd say 80% focus of learning how to trade on this, you could get everything else. On the trend, right? So
right now, the trend is pretty much what everybody sees. Those.
Correct.
Okay.
Yeah.
If you know what that means, then you good to trade.
You got everything, yeah. So that's the higher low, that's the higher high. We got that.
Yeah.
Whenever we break below the higher low,
Bearish.
we're bearish. And now, when this market goes bearish, right, so we'll just mark it off like this. This now becomes the lower low, and this now becomes the lower high.
Okay.
So lower high.
But if we break below the higher low,
the lower high. Yeah, if we break above the lower high, we're back to bullish.
okay, yeah,
Correct,
yeah.
right? So let's run this back right here, right? So this market is now bearish.
This is that higher high though.
Was the higher high. When the market shifted this structure point right here,
Now it's the lower
bearish.
high.
Yeah, now the market's bearish, and when the market is bearish, it
Turns to the lower high.
turns into the lower high. Correct.
Okay.
So as long as we are in between,
But if it was bullish, if it would have stopped right here, this still would have been a higher high.
correct.
Okay.
Yes. So yes, correct. Yes, you got it. You're actually getting it pretty easy. I did not expect that. I'm not gonna lie. I'm not gonna lie. Right. So this market right here is now bearish. This is the lower low. This is the lower high. We could do in here all this fidazzle, whatever you want. We're still bearish because we have a lower low, lower high. Okay. Let's say the market right here breaks below. We are continuation are bearish. Mm-hmm. So this now becomes, all right, I'm gonna do this like this. This market does this like this.
Market messed up bad.
Yeah, but you can make money off the sells too.
Yeah.
Yeah. So right now,
You just gotta guess right.
You make a very highly educated guess.
Yes, yeah.
So this right here would become our lower low, and then our lower high would just follow price back whenever we see that pulse, that market structure. That now becomes our lower high. So this market is bearish as long as we remain inside of here. Same exact thing. We break below again, new lower low, and then new lower high. So this goes to both of these right here. Whenever you break as a new lower low, you always need a new lower high.
Okay.
Whenever you break for a new higher high, you always need a new higher low.
Okay.
Right? So for example, let's say over here, got a lot of lines going on, right? Just delete all these nonsense ones. So it's like very clean when it comes to the market. Like the less information, like the less stuff you have in your charts, the better. So right now, this is the lower low, this is the lower high. If this market does this, what happens?
We're S.O.S.
Yes. Yo, I did not think you were gonna say it. I'm not even kidding. Come on. Bro, yes, we are.
Ready.
Yo, for real, I did not expect that. I'm not even capping right now. Yes, we are S.O.S.
Yeah.
Big problem. We have a shift of structure. What happens when you have a shift of structure? Because we were bearish. So when it shifts of structure, what happens?
Oh, we're bullish.
Yes.
Yeah, we're bullish.
Yo, this is crazy. Yo, I'm not even like capping.
We're locked in,
Brother, I'm not even kidding, dude. You'd be surprised how many people would get that wrong.
Guys, we about to change the profession.
Yo, damn, bro, I'm not even like hyping you up right now.
No, I didn't think I was gonna get it at first. I'm like, damn, I don't know all these charts and stuff like that.
No.
I'm sure there's a lot more stuff I need to learn to be able to trade, though.
Yeah, no, but dude, you get.
But I'm just getting the concept.
Brother, you're getting it faster than I got it, bro. Like
Really?
it took for me to understand what you're understanding right now.
But you didn't have you as a coach.
No, I just had, bro, a bunch of random YouTube videos, bro.
Yeah. Sometimes it's better to learn the hard way.
Correct. Yeah.
Because you feel the pain, and now you can like feel how good it is to be up.
No, I agree. Now that we have this S.O.S, we're back to bullish. So this is now the higher high. This is now the higher low, right?
Yeah.
Easy, higher low, easy, higher high. Once again, this market can simply just have this retracement here. We're still bullish.
Yeah.
Right? We can do something like this. We're still bullish. We can do something like this. We're still bullish because we are yet to break above or below the higher low and the higher high.
Okay. So if we go down, we're bearish, but if we go up, we're still bullish, but it's S.O.S.
No, it's S.O.S is when it goes from a boy to a girl or a girl to a boy.
Okay.
It's when it goes
Okay. So we're still just bullish. It's just a higher high.
Correct.
Okay.
Bro.
You teaching me good, bro.
Bro, hold on. All right, so yes. So if this decides to do this, it's not a shift of structure. It's a continuation of this.
Yeah.
So this turns into the new higher high. This right here turns into the new higher low.
Okay.
Easy.
100%.
That right there is trend. That is how you identify if something's bullish or bearish.
Bet.
All right, so we're gonna put it to the test real quick. All right, I'm gonna pop up a clean chart, and I want you to identify for me if this market is bullish or if this market is bearish. Right?
Yeah. You can get some horizontal too. Do both.
All right. All right. Is this market bullish or is this market bearish?
Oh, this is where it gets real. All right. Is it bullish or bearish?
Just remember what we spoke about. I remember. I should have explained something before, but it's okay. I'll wait. It's good if you make a mistake.
I'll say bullish. I mean, not bearish.
Okay, why? Where's the lower high? Where's the lower?
It's the high, and it broke down.
Okay, show me. Go ahead. Mark it off.
So it's the higher high right here.
Remember, bearish or bullish? You said bearish.
Bearish.
Okay. Okay. Remember, bearish, lower high, lower low. So it can't be a higher high. If it's bearish, it's a lower high.
Oh, higher high.
So what would you say? It's bullish or if it's bearish?
Bullish.
Okay, go ahead. Draw the horizontal line. It's the most important thing.
Horizontal line.
Remember, look, this is a perfect bullish example. Draw the higher high with a line across. Are you rethinking?
So more so right here.
Yes.
Right.
Yes.
Okay.
Okay, so it's not bearish.
Yeah. So it's bullish.
This market would be bullish.
Okay.
Correct.
Only thing that was throwing me was because it broke this line right here, right there. So I was thinking it was bearish.
It was bearish, but
then it came back up
and it went
and
back
it's
to
over.
Yeah, so like it would have a line like this, I'm sure. So that would be the lower high, it broke above. So yes, it
So
was.
this was the higher high at one point. And then when it broke up under this, it became bearish.
Yes,
right?
and then that became the lower high.
That became the lower high.
And then
and then it broke against the lower high. So now it's bullish again.
Now it's bullish again.
That
Yes.
makes sense.
So this market was bullish for this move right here. It was bearish for this move right here. And then it went back to bullish for that move right there.
That move right there.
Yes.
Now let's say it stopped right here. It's still not bullish.
No,
That's not higher than that, right?
It is higher. Oh no, yeah, it stopped.
This
Yes.
would still be bearish.
Yes.
Okay. We're there.
Yo, I don't think you understand, bro.
We're there, bro.
Yo,
We're there.
yo, I don't think you understand, dude. I'm genuine.
I thought I was lost, and I was like, okay, now I got this.
Yeah.
So we gotta do that one more time.
I mean, brother, you literally asked all the right questions. Like you said everything correct. So yes, if this is bullish, right there, it shifts to bearish. So this could do this. As long as it doesn't break above that,
Still bearish.
still bearish. And for the example, I said it did break it.
Now we're bullish.
So now it's back to bullish.
Yeah.
Brother.
Oh, we're locked in.
No. You fucked it up. Like, I'm not even kidding. All right, so to your first original question, and like I really want to double down on trend because again, everything that we do from this point forward is being dictated because of the trend. So for example, like
Bro, this puts it in perspective though, because it's like I've never traded ever. So if this is my first time watching this video, just because I want to watch Ashton Hall, whatever, he can learn a lot of freaking not me.
correct, yeah, correct.
Yeah, that's
Correct,
crazy.
yeah,
I
yeah.
like this. I like this model. It's cool.
Because like I need you to understand the power of like this right here, the trend. Like this is what 99% of surfers, when they go to the beach to go surf, they need to determine where are the waves going. Are the waves going this way or are the waves going this way?
Yeah.
If you
To
know,
catch the wave the right way, so you need to
Correct.
know the motion.
yeah, if you know the waves are going that way, brother, you just go that way and you find the perfect way to get, and that's it, you know?
Yeah.
That is where the main focus should be on. The main focus should be to understand where the trend is going.
So how do you guess the market?
Well, this is the first thing, is understanding where the movement is going, and then you just have to find that sweet spot to enter, which is going to be the next spot, which is the area of interest.
Okay.
Yeah, so I just want to quiz you one more on the first example that you originally set, which was if the market is going down and it does this, is this market bullish or is it bearish?
Bearish.
Wrong,
Really?
wrong. And I'm glad you're wrong.
But it didn't go over this though.
No, but remember,
If it's going down.
yeah, okay, but this was the lower high, this was the lower low.
Yeah.
It broke below that one. This becomes the new lower low, the new lower high. Price broke below this one, the new lower low, new lower high.
Is that because it's consistently going down?
Yeah,
at the
so-
same rate.
Yeah, so new lower highs and lower lows are being made.
So this is a new lower high.
Correct.
And it broke that, so that's why it's bullish.
Correct.
That makes sense.
Bro, you see? Wow, that was like literally what I just did right there. This example right here of this doing this is no different of this example of me doing this. That you claimed it to be bearish because that was the higher low, that was the higher high. It broke below. This is the same thing. This was the lower high, this is the lower low.
And it finally cracked that.
It literally, if we just flip this whiteboard around, it would show the same thing,
That makes sense.
right?
Yeah.
Okay, perfect.
Wish you.
That was, honestly, I am more excited about this than, I don't even.
I haven't seen any other like videos or I haven't even looked into trading ever. I
Okay.
always said I'm not gonna like dabble into that. Always. So
Does-
I don't know how good I'm doing, but
You're doing it. So does this make you feel better just to understand the direction of the market?
100%.
Okay, perfect. So when it comes to the trend, you're going to see, and this is just like to wrap up the trend part, you're going to see, you're not going to see price clean like this. You're going to see a lot of price. You're going to see this.
Yeah.
You're going to see so much price action that you're going to get confused.
It makes it harder to read.
Correct. Like even myself, I would see this and I would be overwhelmed, right?
Yeah.
Because there's just so much going on. And this is where traders get confused. They're like, okay, yeah, over here it was here, and then here it was here, and here was here. And yes, all those points are relevant. They're all obviously valid. But price right now is over here.
Over here.
Like
So none of that really matters.
to a certain
to
extent.
read it,
Yes.
to see where the next move is, that matters.
Yes.
But to see where the bearish or bullish is.
Yes,
over here.
correct. So whenever you want to analyze the market, you want to focus more or less on this area over here, right? You don't need to look super far back when it comes to this, right? So beautiful. I mean, that right there is the trend. So this is going to be the first thing. So the key takeaways from trend are going to be, it is the market structure of the market. It's the pulse. The pulse is reflected by higher highs and higher lows, lower highs and lower lows. Whenever the market goes from bullish to then bearish, that is called a shift of structure.
Yeah.
Big red flag. The market is, screaming, letting you know we are no longer looking to buy. So now you should go look for sells because we've had a shift of structure. And you cannot identify if the market is up or down without market structure. Wow. You need to identify the higher high and higher low, lower high or lower low to properly identify if the market is bullish or bearish.
Okay.
Perfect. Any questions? Any concerns? Perfect. So second thing is going to be AOI. Area of interest is also known as support and resistance. Support and resistance. Supply and demand zone. And order blocks. This is all the same thing. Mm-hmm. A supply and demand zone is an area where you're looking for supply, and an area of demand zone is where you're looking for the demand. Yeah. Support and resistance, supply and demand, order blocks, it's all the same thing. An order block is a block, which is an area of interest. Supply and demand is an area where there's supply and demand. A support and resistance is an area where it's support and resistance. An area of interest is an area of interest. It's all the same thing. And I want to explain this to you because the trading industry lately has had an abundance of people getting creative with different ways on how to educate this, and they just overcomplicated it. Because at the end of the day, they all have the same function. An area of interest is an area of support or an area of resistance. It's where the market, if it's below, it's going to reject. And whenever the market is above, it's simply going to reject. So whenever the market approaches an area and it goes the opposite way, there's clearly something there that's pushing it down. So like, let's say right now we had a ceiling over our head and we're trying to stand up. We can't because there's a ceiling over our head. That's a resistance. And let's say we want to stand up, we're going to push off of this table. This is our support. We're going to push ourselves up. So the support is what pushes price up. The resistance is what pushes price down. That's support and resistance, right? So resistance holds price down, support holds price up. Now, you can also have resistance be used as support and then push price up. So for example, let's say we would be below this table right now. If we want to get up, we would hit our head, we can't get up. But if we were to get the table below us, we then would use ourselves to get up. So you can use this resistance as support to push ourselves up. Okay. So resistance could be turned into support, and then if something is a support, it could then be used as resistance to go to the downside. That an area that is used as resistance and support is what's called an AOI, an area of interest. It's an area where you are interested to either sell if you're below or buy if you're above. Sell if you're below, buy if you're above. This is very simple. And finding it, well, any questions with this so far?
No.
Very simple, right? Roof, floor. That's how you should think about it. If you are below, that is going to be the roof, which is equal to resistance. And then if you're going to buy, it's going to be the floor, it's going to be support. So it's going to be holding you up, right? And then both of these work together, which is what makes up an area of interest. Both of these combined are an area of interest. Yeah. Right? So the problem with 99% of traders is that they don't know how to identify properly an area of interest. And they identify an area of interest very incorrectly. And I'm going to simplify it for people in 5 seconds, right? So the first things first, you understand that the market is?
Bullish.
Correct. So this is the higher high, this is the higher low, right? What if I told you if the market is bullish, you should only be looking for buys? Obviously, right? Yeah. You can't be looking for sells if the market's bullish. You need to place the area of interest within this higher high and within this higher low. What happens with 99% of traders is they'll see this market that is going to the upside. And then what they'll say is,
They'll put it to the top.
yeah, for example, yeah, they'll put an area of interest up here, or they'll put an area of interest over here, for example. Like, you know what? I want to buy when price gets here. So what they say is, all right, I want to wait for price to come back into this area. Once it comes back into this area, I'm going to buy. But what's the problem with that? That is the higher low, and guess what happens when the market gets there? There's a shift of structure. It's bearish. So you can't be buying in a market that's bearish. So that's the problem with 99% of traders, that they simply place the areas of interest incorrectly. You need to place the areas of interest inside of the higher high and inside of the higher low. So an area of interest is where the market has had 3 or more touches. So area of interest equals 3 or more touches. What is a touch? For example, this right here is a touch. You have one touch right here. The market rejected it once. Market rejected it 2 times, 3 times. That is a valid area of interest.
That means area of interest. That's where I kind of stuck.
Correct. So obviously price right now is not at that area of interest.
But that's where they've been majority of the time.
Correct. Now that's where you have to wait for the market to get there for you to take the trade. But for example, here, if this market, right, we know that that's the higher high, that's the higher low. If the market makes it to that area of interest, we're now bearish. So we can't sell at a support, right? So like, it's like you jumping into a 2-foot pool. You're gonna break your nose, right?
Yeah.
You need to be able to have more depth to it. So an area of interest is what just has more than 3 touches. So if I look over here, I can just place, you know, for example's purposes, we'll just bring this one a little bit more up. Like this. You can see that this right here is an area
Of interest.
of interest, correct. It has been used as resistance once, twice, and 3 times. So it makes the most amount of sense to wait for price to come back into this area.
Right there.
And that's where you would buy. That's your area of interest. So perfect analogy is you have,
When you buy, you're buying that what? What are you buying?
what do you mean?
You said you would buy right here when it gets back into the area of interest.
Yes.
But like what? What are you buying?
So at no point do you actually buy a currency pair. You're just betting that it's going to go up.
Oh, you're okay. So when you buy, you're betting it's going to go up.
Yeah.
Sometimes you could bet that it's going down.
Yeah, that's where you would sell, correct.
Oh, it's when you sell.
It's the same thing. Like, well, when you
Okay,
sell.
you sell when it's going down. When you think it's going to go down, you sell.
Yes, correct.
You buy when you think it's going to go up.
Correct, yes.
Okay.
But
You make more money selling or buying?
Same thing, yeah. I personally make more money when I'm selling. I'm just a better seller. I don't know why.
Oh, really?
Yeah, I just
You know when it's about to go down.
Yeah. I can spot easier when it's going to go down. Yeah.
Okay.
So,
But not everybody is a better seller. Some people are better buyers.
some people are better buyers. Yeah. Everybody's different when it comes to that. Yeah.
Okay.
It's the weirdest shit ever, honestly. It's like if you're gonna go surf. Some people. Have you ever snowboarded? No. You ever skateboarded?
Yeah, a little bit.
Okay, you know when you go skateboard, you either go goofy or the other one.
Yeah,
It's the same thing. Some people are better with their right foot forward or their left foot forward.
Nollie or something like that. Yeah.
No, Ollie's when you jump.
Ollie or Nollie.
Oh, Ollie or Nollie, yeah,
like
correct, yeah. It's the same thing. So this is an area of interest, which is the resistance of price, right? So this right now, if you're below it, you're gonna go down. But if price is above it, you're gonna have a push up.
Okay.
That is literally how you find an area of interest. It's within the higher high and higher low. Now,
Oh, really?
yeah, that's it. It's very easy to find it. For
It
example,
has to be within the higher low.
yeah, for example, let's say,
Like this is one because it's right there to even.
yeah, but that one would be bearish. So you would have to wait for price to get below that area,
To sell.
come back, retest it, and then sell, correct? For example, right here, bullish or bearish?
Bearish.
Amazing, right? So, you know, that's the lower high, that's the lower low. So if this market is bearish, you need to look for sells. Now, you would work inside of this right here. You would work inside of this lower high and inside of this lower high and this lower low to look for that area of interest.
There's not one though.
So here, for example, if we were to just start like hovering price right here, that's not one because it only has one touch. If we go to this one right here,
That's 2.
this one would have 3. You have
really?
1.
Oh, so that's the area of interest.
Yeah.
Okay, because you can count if it's going down too.
Yeah,
Okay.
yeah. You can count touches above or touches below or above. Correct.
Does it have to be exactly even or not really?
No. So that
close.
Yeah, that's why like you never do like an exact line. You do like a little zone, a box.
Okay.
Kind of box it off, right?
Because it'll never be perfect.
It'll never be perfect, correct. And then here you would wait for price to have a retracement into here, and then that's where you would then be looking to sell.
Okay.
That's it.
So you're waiting for it to go up, and you're guessing. You're pretty much going to guess its peak.
Yeah.
Right before it drops.
You guess its peak. Yes, that's great. You guess its peak, and then here is basically where you wait for then the next step, which is the entry signal. That then from that is the area that it's going to go down. One, because
so if I bet right here that it's going to drop right here, but it continues to go up, I lost. If I thought it was going to do that, and I was trying to sell right here, I'm done. I'll lose money.
Yes.
Okay, but if I bet right here that it was going to drop and it actually drop, I sold, then I'll make money.
Yes.
But if it went out, then I'll lose.
You would lose, yes. It just simply makes more sense to take the sell here than here or here, because there is a historic pattern that whenever we're below this area, we go down. There is not as much background from here that it goes down from
So
here.
you wait for it, right? When it hits that same little peak,
Yes.
and say, oh, that's the ceiling.
Yes.
You call it
A resistance.
the resistance. They're not breaking the resistance.
Correct.
Because why would they?
Well, yeah, if historically, whenever we approach it,
But obviously they're bound to break it at some point.
Yeah,
you're betting that they're not doing it yet.
correct. And well, the first thing is you have the trend in your favor. So that is already giving you more odds that this is going to start going down, right? This is just having that retracement. And then 2, you have the area of interest that
So
it's
trading is all about selling and buying, just period.
Yeah, it's just betting
So I
like
can
it's
trade, right?
Yeah, you can trade whenever, yeah. You're just betting that it's going to go up or down. I mean, bro, it's already a 50-50. It's head or tails. Like, it's really like...
Well, I just put down like 10,000 or something
Yeah, you can put 10,000, yeah.
every trade. We're just betting 10,000.
Yeah. I mean, I risk like 150 per trade.
We're gonna start with 10,000.
No, what I'm saying is that...
We're gonna start with 10,000. I'm not you.
No, I know, but I'm saying you could. But don't get too hyped yet. I know, it's just... Just. That's very
Don't
normal.
do it yet?
No. There's so much more that goes into it.
Stay humble.
Yeah. Okay, but what matters when it comes to the area of interest, for all you got to do is sell if you're below, buy if you're above.
Yeah.
So right here, we're bearish and we're going to be below it. It just makes more sense to sell,
Yeah.
right? All right, so let's say this market...
Have you seen somebody inexperienced just hit big
Yeah, bro, we have
and they
students.
stay up? Or they lose it?
Some guys lose it, yeah.
Because they don't have experience.
I've had students take like it's been their first 3 weeks of learning how to trade. They've taken $1,000 to about $130,000 the first 3 weeks.
Then they go crazy.
Yeah, they'll withdraw like 100, they'll leave like the 20, 30, and then they'll blow that. Because they would just like get too aggressive and get too confident. But yeah,
And then they get broke, they become broke again.
I don't know if they become broke again, but we've had students that have made a lot, lost a lot, you know.
So should they? What's your advice if I'm a student and I make 1,000 or I have 1,000, but I'm broke though? I have 1,000, we get up 100,000. What do I do? What's my next play? But I don't have the experience. I just got lucky.
Yeah,
I got a little bit of knowledge from you, but I'm not there to be going to buy a new car or betting the 130. Like, what's my next step?
I would withdraw half of that money, withdraw 50, leave 50 in the account, and then
Withdraw 50 and
yeah. Withdraw 50, lock in something in your bank, like pay off.
lock
debt.
it in the bank. Sure.
Yeah, lock in some debt, pay off some debt, whatever. Leave the 50 in the account.
Okay, boom. Okay, keep going.
Yeah. And then from that 50K in the account, you only risk a small percentage per trade. So you're not overexposing your
Also, don't bet the 50.
Don't bet the 50, no. No, don't bet the 50.
Play like I'm broke still.
Yeah. The risk management is what keeps you alive in this game.
Because if I don't have the experience, I should be using that 50 to get the experience.
Yeah.
But if I use that 50 in betting like I have the experience, I don't have any money to play with no more.
Yeah, you might lose the whole thing, correct.
So when you get the experience, then you can go in.
Yeah, you can go in, correct.
So what is the rule? What percentage of my stuff can I go in? If I got $1 million, what percentage should I play? Because it's going to be different. If I got 1,000, okay, 20%.
Yeah.
200, you know what I'm
Yeah.
saying? Million,
Yeah.
20%.
I have a $3 million account. I risk 4 to 7% every trade.
4 to 7%.
Every trade, yeah. That's my risk appetite on my account.
Do you feel like you can run out?
Yeah, no, I can never run out. I would have to lose 30 trades in a row. That's practically impossible.
Oh, really?
I think it's impossible to lose more than 15 trades in a row. If all of the trades...
Even if you suck?
Even if you suck. Yeah. I think it's impossible. If, let me be very clear here. If every trade that you take has met the strategy to perfection, if you're following all these steps. Because like if the market is...
So as good as you are, right?
Yeah.
Now you're good as freak. Like you're top 1%.
I would say I'm like top 4 or 5%, yeah.
Okay. So with the skill that you have, is it guaranteed that you're going to be up in 5 years? Or could you still just have a bad 5 years?
I don't think I could ever have a bad 5 years, no.
You could have a bad year? And when I say bad year, I mean you're under, like you lost money.
No, I don't think I can have a bad
You
year.
can't lose money at this point. You can't like go 365 and lose money.
No.
No, you could lose money in 30 days for sure.
In a year, definitely not.
No?
No.
It's dead.
No, that'll never happen.
So you should carry your lot.
Yeah, like I
So you
can
pretty much have salary. Like,
but yeah, like I can definitely be negative for a quarter. Like I've had 2-month losing streaks, but a whole year, there's no way. I don't want to say it's impossible. Something might happen, but there's a very
like them
very
2 months though, you heat it. You're like, yo, watch out,
bro. I've lost like I think it was like 900 grand in a period of like 60 to 90 days. It was brutal.
You were pissed.
I mean, it was just loss after loss after loss after loss.
Could you smile during that time?
I did, yeah. I smelled a lot.
Oh, really?
Yeah. And it was all like publicly, like on social media and shit as well, which is.
But see, you definitely gained off of losing. That's lit.
What do you mean, like?
You gained off of losing. Like people are just like, oh
correct.
did they know you were down almost $1 million?
I mean, bro, people were losing with me. Yeah, like I was sharing the trade. People make money with me, and they also lose with me. Part of the game. Losing is very normal. That's why you only risk a small.
But
percentage.
you knew that you were going to bounce back and get out of that.
I knew. Yeah.
You weren't like, yo, I'm about to be done with this.
No, I mean, bro, it's just a pattern. Like if you're flipping a coin, heads or tails. Tails can come out 10 times, but it's a matter of time that heads comes out.
The game is you just can't run out of money to play with.
Correct. You can't over leverage yourself. That's what a lot of traders do. They just are too aggressive with their risk management.
So if a dude came in here just like with like the hugest ego and just like he took over your body, right? Cloned you, whatever. New Alex G still has skill, but now he's just betting above his means. He can go broke.
He can go broke. Yeah.
Have you ever thought about
Bro,
just upping your stuff?
I swear to God, you're asking the best questions ever, bro. Like, I'm not
because I want to see if I'm gonna play a game. I want to see the odds of winning.
No, but like you're literally asking the right questions because you're asking a longevity question. You're not asking how to get rich. You're asking how to stay in the game.
100%.
And this is a game of staying in the game. You don't ever win this game. This game doesn't end.
Yeah.
The goal is to stay in as long as you possibly can.
Yeah.
And the way you stay in as long as you possibly can is by having that risk management.
Yeah.
Risk management is what keeps you in the game. Literally.
And that's why I gotta see, is it even a game I want to play? But it seems like if you're smart, you can keep running.
It's all about how you control your decisions on when all of this. So I have a checklist, right? And whenever I go enter a trade, I literally check something off.
Yeah.
If it's there. So let's say I think it's 18 confluences before I go enter a trade.
Yeah.
Right? Let's say this I have, this I don't have, this I don't have, this I have. At that point, I can make the executive decision, being like, you know what? Fuck it. I'm going to take the trade. Or be like, you know what? I don't want to take the trade. I'm going to wait until everything is checked off. That decision making to enter the trade when things are checked off or not is what's going to give you that longevity.
Okay.
And how much I risk. If I want to risk 5% of my account, or if I'm going to risk 50% of my account, that will be the longevity of you in this game. The decision making behind how many reasons you need to enter the trade and what you're going to risk. That's it.
Okay.
We're going to do a test later in the future where we're going to get a random, probably a homeless person from the street, and we're not going to teach him how to trade at all. We're just going to give him this, and we're going to give him a risk management. Like, we're going to be like, brother, all you can risk is 1%. He has to get 100 trades wrong in a row to blow his account. That will never happen.
Yeah.
And I guarantee you that he will make more money than an experienced trader that would be risking 50%.
Really?
He just has to lose 2 trades. And he's done.
Dang.
This person can trade 20 trades and he won't be negative.
So you gotta kind of like slow grind it.
Yeah. This is a business. Yeah. Imagine trading as if it were to be like your physique. You know, you're not going to get abs within the first 24 hours of going to the gym.
Yeah.
It's a process. You need to.
If I get under 400 pounds on day one, I'm gonna hurt myself, and I'm gonna be out of the game forever.
Correct. Yeah.
Scarred for life.
Yeah. You need to like if you're 400 pounds, you need to lower your calories. You can't just go and do 2-hour cardio, 2-hour sauna. The next day, you're not gonna want to go to the gym. You won't like it. You do 15 minutes cardio, 15 minutes sauna. You slowly ease into it. And then over time, you're going to see the difference.
Then you become a big dog. Then you can, go hang with the wolves.
Correct. Same thing.
Rock with that.
All right, cool. That was a good sidetrack. I like that. I'm telling you that's very important that you're asking the perfect questions, right?
Appreciate it.
So back to the area of interest, right? So if a market is, for example, right here, let's say bullish or bearish.
Bearish. I mean bullish.
Correct.
It went over the.
Yes. Went over this. So this is the higher high. This is the higher low. You need to look for the area of interest inside of this higher high and higher low. The market over here could have done anything that it has wanted like this. You don't care about up here. You don't care about below here. You don't care below the higher low. You don't care above the higher high. Yeah. So right here, you would start looking left, right? So the market's going to start retracing back.
Oh, you got right there.
Yeah, so the market's going to start coming back.
So you put 3 in there on purpose? Like you know how to just put 3 in there?
Like 3 touches?
Yeah.
I mean, yeah, I'm just doing it for the example, yeah.
Okay, so let's say that this didn't exist, right? The area of interest, could it be this because it's kind of going down or no?
No, the area of interest always has to be horizontal. It has to be a horizontal line or a horizontal box.
Oh, that's too low.
Yeah.
Okay.
It would have to be
so there would be no area of interest if that wasn't there. 1, 2, it wouldn't be no area.
Well, technically, if this wasn't here, this market would be bearish. So we'd have to be looking for an area of interest to sell. Because this is the lower high, this is the lower low. This right here, that does not have 3 touches. This does not have 3 touches.
Yeah, it would be none.
There's no area of interest.
Okay.
Correct. If there's no 3 touches, there's no area of interest.
Okay.
Right? Perfect.
So if there's no area of interest, you just don't do nothing.
You just don't take the trade.
Really?
That's
some people still take the trade.
That's the problem as well, yeah. But that
they just bored.
Exactly, that's what I'm saying. Like people will literally.
That would be me.
Yeah.
I'll be like, brother, listen, we got to do something.
Yeah, that's what I'm saying. Like people will have the trend. So like for example, they'll be able to identify that the market's bearish, but they won't have an area of interest.
Slow motion is no motion.
Yeah. I mean, yeah, but like they won't
it's
have.
Risky.
Yeah, they won't have an area of interest, and then you're like, you know what? F it. We're still gonna send it. And it's like, well, now you're just taking a high risk trade. Yeah, I do it all the time. but the beauty of it is that I know what I am entering. Like I'm fully aware of it.
Experience.
Yeah, I'm aware of it, and like I'm ready for the risk. And like I'm gonna go out to the ocean. I see a wave, and I see a fin. Might be a shark, or might be a dolphin. But you know what? My experience tells me
sometimes that game is better to play anyways.
Yeah, the day's sunny. There's beautiful waves. The current, everything's good. Is it worth the risk or not? It depends what you're asking.
Yeah, and then you get better when you get the area of interest. Because that's cake to you now.
Correct.
Because you're taking the big waves.
Correct. All right. Perfect. So let's set one more example here when it comes to the area of interest. So
I thought we was going to press a couple of buttons.
There's so much more you need to learn before that.
It's different.
Yeah. Like you need to know why you're pressing the button.
Yeah.
Right? So this market's bullish. Higher high, higher low. Now, this market, we're anticipating that it's going to have a retracement to buy. Is that an area of interest? Yes or no?
No.
Perfect. Is that an area of interest? Yes or no? Yes. 1, 2, 3. Is this an area of interest?
No. Why? Oh, yes. 1, 2, 3.
It is?
Oh, area of interest not because it's below the...
yes. Lower on fire. Perfect. That was a trick question. So technically, that is an area of interest, but just not for this specific trade we're interested in right now, right? So we would be waiting for this market to have a retracement into this area of interest right here. Let me put this. Waiting for this market to have a retracement into this area of interest where it's rejected once, twice, 3 times. Now, can the market have a reaction from here and have a push up? Of course. Can the market break below this area of interest and then have a push up? Of course. But that is just simply not our trade.
Okay.
We just simply didn't meet our strategy, we move on to the next trade. Right? So once the trade makes it to this area of interest, what do?
You bet.
You need to have the next point. Entry signal. The most important thing. It's going to tell you that the trade is ready to enter. So let's summarize before we get into entry signal.
So right when we hit right here, it's time to bet. We're going big.
But we need to have our entry signal. We need to have the indication that it's ready to enter. Just because it's there doesn't mean that you could enter it right away.
Okay.
Perfect example is you have a...
But if this is our area of interest, we're betting that it's going down, right?
No, because we're bullish. Once it gets there, we're going to bet that it's going to go up.
So bullish, okay. So we got the area of interest and we're bullish, we're going up.
Correct.
Always.
Always.
And if we're bearish, we're going down.
And we're at an area of interest, we're going down. Yes,
okay,
always.
Because we're up right now.
Yeah.
Okay, solid.
Correct. So to summarize, area of interest is something that is consisted of 3 touches. If you are below the resistance, this is considered the ceiling. That is the roof. If you are above, it is considered the support. For example, let's set this example right here. That is the support. It's going to be the floor. These combined, resistance and support combined, is the area of interest.
Yeah.
3 or more touches is what validates it. Whether you have resistance as the 3 taps, whether you have support as the 3 taps, or whether it's a hybrid where you have 1 resistance, 1 support, and 1 resistance, as long as this zone has 3 taps.
Okay.
Perfect. All right, so this is area of interest. Now, when a trade is bullish, we need to wait for price to come to that area of interest. Once price is at that area of interest, then we move on to potentially entering the trade. So next point, and technically the final point, is going to be entry signal. So entry signal is, I'm going to set another example. It's almost, have you ever played baseball?
Yeah.
You play baseball, right? Okay, so you know when you have the batter, right? I'll mind my stick figure. You know, the pitcher that is going to be pitching you the ball from this area over here, this ball that he's going to be pitching at you, it needs to land for you to swing at it within that box.
Yeah.
You know, if the ball doesn't land within that box, it's a foul ball if it lands up here or over here, right? Your job as a baseball player with the bat is to hit this ball in this zone for you to either get a home run or for you to actually hit it.
Yeah.
Now, many times these baseball pitchers make it seem tricky, and right before it hits the box, it drops off. Or it might get out of the box, and that's where you see these baseball players swing and miss, right? Your job as a baseball pitcher, as a batter, is to hit the perfect ball.
Yeah.
Imagine that you are in a game of baseball and your only job is to bat and swing at the perfect ball. The pitcher is just going to be throwing balls every single second of the day. Your job is just to wait for the right one. You cannot humanly possibly swing at every single ball that is going to come. You're going to strike out, you're going to get tired, and you're just not going to be in the game long enough.
Facts.
You need to wait for that perfect pitch. And that perfect pitch is when you're inside of that box. There might be many times where you're looking at that ball and it might seem like it's going to go into the box. And if for whatever reason you don't have the perfect indication to enter it or to swing at it, you don't have to.
Yeah.
You're not obligated to swing at it.
You could miss a good a good ball. It's okay.
It's totally fine, right? You're not going to get striked out. Nothing's going to happen. That's the exact same thing when it comes to trading and the entry signal. So whenever the market is trending, right? Let's just pretend like this is an area of interest. And price comes back into this area of interest. So now we're here going to be looking for our entry signal. Many traders look to have any possible reason to enter the trade. And that's completely wrong. You shouldn't just enter the trade for any reason. Just because a trade is at the area of interest, you should not enter. Just because the ball that the pitcher is pitching at you, you don't have to swing at it just because it's right dead in the center. Can you? Sure, but you want to make sure that it is perfect, that the lights align, that the wind aligns, that everything is good. You don't have to swing at it. Now, this entry signal needs to be perfect every single time for you to take the trade. It's okay to miss a trade. Can you sometimes be too picky or wait for too many confirmation and you miss it? Sure.
So if you're trading, you trade every day as long as the market is open.
Yeah. You need to wait for the perfect entry for the perfect trade. Correct.
Can you miss a day?
Yeah, you can miss a day. There's no problem. You can miss a day playing baseball. Nothing's gonna happen.
Oh, really? You might miss a week.
You might miss opportunities, but the opportunities are the pitcher's always gonna be there pitching the ball. It's a machine.
You trade every day?
I'm looking at the markets every day for a trade.
But you might not trade every day.
I might not trade every day.
Oh, really?
I might take 2 trades a week max.
Really?
Yeah.
Oh, not everybody trades every day.
No. There's some traders that take 4 or 5 trades a day, where you're basically being more exposed to losing. The more you trade, the more odds you have of losing. The more swings that you take, the more odds you have of missing and striking out. I try and...
Don't you get better though?
No.
Really?
It's about quality, not quantity.
Oh, really?
Yeah, it's about waiting for that perfect ball. You don't need to switch. You don't need to swing at every pitch.
Bro.
At the point that I am right now in my journey,
So you would put content different though. Content is like more, it's a little bit of both.
Yeah, no, content, it's a volume game.
It's volume.
Because you're competing against
So you're going to get better and then one of them might hit.
Yes, correct. This is, yeah.
So it's not in trading, it's different.
Yeah, because like, the problem with content is that you're in control.
Yeah.
You know, like whatever you put out there is what you're going to get.
Yeah.
You don't control the market at all.
Yeah.
You can't control this.
Don't bring that to this market.
Do not bring that
you
to
will
this
be in
market.
trouble.
You could get experience by trading a lot more and, swinging at every pitch, but you're going to get tired. I can almost guarantee you. Like you will cap out. Right? So once a trade is at an area of interest, you want to wait for an entry signal. So the first thing that you can have is going to be a rejection candle, or you can have a engulfing candle.
Yeah.
Have you ever heard of these before?
Nope.
Okay. So what's a rejection?
She said no.
Correct. A rejection is when something gets rejected.
Yeah.
When something is engulfing, what's an engulfing?
Get ready.
It's when something engulfs something.
Yeah.
Like right now, like you are engulfing me in size. Like look at the camera. Like just like you see, like you are bigger than I am.
We're close, bro.
No, we're not.
That much of a difference, though.
But like you are far bigger than I am, right? Like you are engulfing me, right? Yeah. So rejecting is when something is literally rejecting it. Engulfing is when something is eating something.
Yeah.
So you're gonna look at this in forms of candlesticks. So you see these boxes that go up and down in the markets, right? These are the candlesticks. These are just how the market is reflecting price. It's very similar. So basically you would have a market that is like this, but instead of it being a line chart, it's gonna be in a candlestick chart. So it's the exact same market. It's just being reflected in these candlesticks like this. Right? So this market right here is literally the same market as this one right here. It's just being reflected in these candlesticks, right? Okay. These things up and down. So when you have one of these candlesticks, for example, let's say this is the area of interest. This is the box. So we're basically zooming in at this right here right now in candlesticks. If the next candlestick has a big wick, so this wick is a rejection. That's basically the trail of price. And you have like a cross, something like this, a big cross, that is a rejection. That is the market letting you know that we are rejecting this market. Or you can have what is called an engulfing market, right? So this right here is, once again, we're at this area of interest. Price is now officially here. We're basically zooming in here. And the next candle would be an engulfing candlestick. So it's clearly showing that this candle is bigger than these two. It can be bigger than 1, 2, 3, the more the better. So this is a sign of rejection because clearly we've pushed up very strong from here. Or this is another very strong sign because price went below it but closed above it. So it's showing that it's not liking this area anymore. So this right here is a rejection candle, and then this right here is an engulfing candle. So once price makes it into this area and we either have a cross or a bullish candle, we're basically ready now to enter the trade. That is our entry signal. So our entry signal could be to take it now, or you say, you know what, I'm not feeling it. Or you know what, I want for it to retest it again, or I want it to have another engulfing candlestick. At that point, you can get as picky as you want, right? You can ask for as many things, but this is officially the green light for you to take this trade. This is officially the pitcher has pitched you a straight ball into your box. You're standing right here. You've been waiting all day with your bat. It's perfectly dead in the center. The speed is not too fast. It's not a 100-mile-per-hour ball. It's a 60-mile-per-hour ball. It's a straight ball. It's ready to swing. You can make the decision to swing or not. At that point, it is entirely up to you and your experience. That is entry signal. It's very simple. It's just consisted of a rejection candlestick or an engulfing candlestick. Does that make sense?
Yeah.
Might make more sense now when we go to the actual charts and we quiz
Once
you.
you get one of these, you're ready to swing.
Correct. You're basically ready to swing into the market.
You don't have to, but
yeah, correct. Okay, so I'm going to set an example, right? So for example, this market right here, right? Let's just do it like like this. Bullish or bearish?
Bullish.
Correct. Now, is that trade ready to enter, yes or no?
Yes.
Where's your entry signal? What a candlestick is that? What candlestick is that? We're looking for a rejection one?
It's the rejection.
This is a rejection candle. That's a cross. Right, that right there is not a cross. It's not a rejection candle.
Okay, so you're talking about how it looks.
Yes, yes.
So if you were to put a cross, okay.
Yeah.
I was saying rejection because it's going down.
No.
But it's off of the look.
Correct.
Only.
Yeah, it's off.
And so it'll show you. You don't have to like.
No, you don't have to second guess it. It'll literally tell you whether it's a rejection candle or whether it's an engulfing candle.
Okay.
So right now you don't have
It's engulfing.
Yeah, no, this is not an engulfing. This is basically here. The engulfing would be this candle right here.
Making it bigger.
Yeah, it's where it eats the last candle.
Okay.
So
why would it do that?
Because that is showing that its price is rejecting the area of interest since we're above it.
Okay.
Because whenever we're below it, we're rejecting it down. Whenever we're above it, we're rejecting it to the upside.
Okay.
So that right there would be a rejection candle to the upside. That is our entry signal.
Okay.
Another example would be if price basically is at this area of interest, right? This area of interest, and then we have a cross. That
rejection
is another rejection candle. That is our ready to enter this trade to the upside.
But being that we didn't have either one of those, we're not ready.
Correct. When I asked you, it was like this.
We had not.
And we did not have neither of those, so we were not ready to take this trade.
I was thinking we were ready because we had a common area.
Yeah.
The area of interest.
Yeah, that is where you would need to wait for one of these
Okay.
for you to enter the trade.
Okay. So it doesn't matter about the area of interest. You need to see rejection or engulfing.
Correct.
Okay.
That's perfect. Yeah. You need to wait for either or to happen.
Okay. It could be like 4 or 5 different spots of area of interest.
Correct.
Okay.
Correct.
Still wait.
Yeah, you still have to wait. Correct.
Okay.
Perfect.
And the charts will show you rejection and engulfing all the time.
It'll literally give you one of these two.
It's going to tell you?
Well, it'll show you many other ones, but you only look for these two right here. A rejection or an engulfing.
Okay.
Let's go to the charts and let's see how good you learned. All right, so I'm gonna show you an example now on the actual chart. So I was showing you this earlier, was on the line chart, which is something like this, right? So we don't really trade on the line chart. The line chart is used to identify market structure. Something is bullish or if something is bearish, right? But we actually trade on the candlestick chart, which are these lines that go up or down, right? So just to show you an example of what that rejection candle looks like, this would be it right there. See that cross that happened there perfectly. The one next to it actually would be a perfect example of an engulfing candlestick. This right over here would be an example of a engulfing candlestick as well. This right here would be an example of that cross, of that rejection. This over here would be that example of a engulfing. Let me grab this right here.
So cross.
Correct. Yes. Yes. Correct.
Engulfing.
Correct. So this would be a cross, massive engulfing.
Wait, where's the cross?
So I guess you can consider one of these two right here a cross.
Why?
Because it's a. I mean, the body is a bit big. It would be better if it was like this one right here, where it would have no body. So it's just like a little cross. The candlestick isn't red.
I don't even see a cross right here.
Correct. Yeah. It's not the cleanest cross. Yeah, this one.
You ain't betting on that one.
Yeah, correct. Exactly. So like if it's not clean, you don't have to take it.
That's a cross?
Very clear cross. This is an engulfing candlestick to the downside. This is not an engulfing candlestick.
You're saying this blue one is a cross?
Kind of. It's not.
It's just not like thin.
Correct. It's not, the body isn't thin, correct. This right here is a very clear one. You can tell that there's literally nothing there. It's just a cross. And we can go on for literally ages just finding these. This is not the cleanest cross, but somehow there. So it's never always going to be perfect. You just want to have it as perfect as you possibly can ask for, right? So this is how we look at the markets when it comes to actual market structure. It's going to be based off of just these candlestick moves, right? So let me ask you, is this market bullish or is this market bearish?
It's bullish.
Bullish, okay. Where's the higher high? Is the higher high at point number 1 or at point number 2.
The L1.
Correct. So this would be the higher high. We're going to write down here, higher high. All right. Now, where's the higher low? Is the higher low at point number 1 or at point number 2? All right, perfect. On the money. Yes. So this market is indeed bullish. So this is the higher high and this is the higher low. Right? So we're going to put here higher low. So we know that this market is bullish. Yeah. And we know that we're going to only look for the area of interest within this higher high and this higher low.
1000%.
Okay. So we start working our way down. Obviously, we're not going to look for an area of interest up here because price.
Found it already.
Yeah, where is it?
I'm locked in.
Where is it? Okay. All right, let's see. We bring it all the way down here. This one? Right there? Mm-hmm. Bang. Correct. That's an area of interest. You see it? 1. So we'll circle it off, right? So we got 1, we got 2, and then we got 3. Area of interest. But there's also another area of interest, which would be somewhat this one. Oh, this wouldn't be considered an area of interest, but here you have 1 and 2. So it's not considered an area of interest. This is the only area of interest. Easy. That's it. This is not an area of interest. This is not an area of interest. Right? Everything makes sense so far, right?
100%.
So you can tell that the market is bullish. You can tell what is what, right? Now, what if I told you that this market right here is exactly what you just did right now? Just you did it on the line chart and here is on the candlestick chart. So if you notice, it's literally the same market.
But just more confusing.
No, it's not. It's not confusing. It's just it's presented in a different format. Yeah. So correct. These are all those structure points right there. So I was teaching you in English, right? So you just learned how to read and write in English.
Oh, that's Euro.
Yes, this is USD CHF. No, but what I'm saying is like the language that you learned market structure is in English right here.
English, yeah.
Now this is Chinese.
Oh, really?
But we're saying the same thing. This is
actually Chinese.
I mean, kind of, yeah, something like that. No, it's not actually in Chinese.
Yeah.
Well, I mean, they're actually called the Chinese candlesticks.
Oh, really?
Or no, I mean, I'm sorry, Japanese candlesticks.
Okay.
Yeah, these are Japanese candlesticks, right? Yeah. So this says the same sentence. So this is basically explaining this market is bullish. We are at a higher high, higher low, and we're at an area of interest. That is what this says in English.
Yeah.
Now this is saying the same thing, but in Japanese, and you're reading it off of the candlesticks. So let's say that this is the area of interest. Are we ready to enter this trade based off of our entry signal? Yes or no? Forget about this. Are we ready to enter this trade based off of the entry signal? The entry signal, remember?
Entry signal.
So this is where price is. This is the area of interest that you just marked off.
Yeah. Let me see that real quick one more time. No.
Why?
Because this isn't a cross, right?
Correct.
Come on, man.
That's it. That's literally it. Yeah. That is not a cross, so there's no rejection. Yeah. And then there is, so you don't have one of these right here. If you had something like this, if you had a cross that was presented right here at this area of interest, you
going in.
You would be ready to go in. Or
Wheezy.
Or if you had one of these,
candlestick.
If you had an engulfing candlestick like that, you would go. But you but you don't have neither, so you don't take the trade. That's trading.
I'm ready.
Yeah, that's it.
I'm telling you,
okay.
I'm ready.
All right, so right now you have 3 tries. I'm going to go back. I'm going to find an opportunity, and then you either decide if you want to enter or not.
Tell us.
If you get all 3 of them wrong, you eat this chip.
Ain't no way.
All you gotta do is get one right.
You taught me too much, man.
Okay.
I want the people to see me eat the chip.
Okay,
you taught me too well.
All right, so
you gotta trick me.
Yeah, I'm gonna trick you. All right, so you gotta turn around, right? So let me see. So you first start off with the line chart. Is this market bullish or is it bearish?
Bullish.
Okay. Where's the higher high? Where's the higher low?
Higher high right there.
Okay.
So higher low right there.
Okay, perfect. Higher high, higher low. All right. Now what?
Now we gotta see if we're going. Oh, we gotta find the
area of interest.
Area of interest.
All right. So is the area of interest like this? So we look for it like this.
Bring it up.
Correct. Bring it up. All right. Perfect. So we start working our way down. I
see an area of interest.
You see it? Is this an area of interest? We can count it off, right? All right, we have 1, 2,
Yeah.
3,
Yeah.
4.
Yeah.
Valid area of interest. Okay. So we're at an area of interest. So what do we do now? We go to the candlesticks and we look.
See if we're gonna bet.
Yeah. All right. So that is exactly
I'm betting.
what is happening right here. What are you gonna do?
I'm betting.
You're gonna buy or sell?
I'm buying. No. I'm selling.
You sure?
Wait, let me see.
It's very easy to click. Yeah.
Oh wait, all right. So, yeah.
The market's bullish, and you're at a support level.
Oh, this is a hard part. Hold on. So we're bullish. I'm saying so we're going up. So I'm gonna buy.
Yeah.
Yeah.
So
bullish.
if you're bullish and you're at a support, it makes sense to buy. You sure?
100%.
You sure?
1000%.
Okay. All right. So you're ready to buy this trade right here.
He's trying to trick me. Chat. Come on.
Are you ready to buy this trade right here?
Wait, hold on.
Remember,
No. I'm not buying because I had a cross.
Yeah, you need the rejection at the area of interest. This is an area of interest. That's your cross.
So that's good.
Yes.
Okay.
So you're ready to buy or sell?
Buy.
You sure?
Buy.
You sure? If you,
I'm ready to buy.
all right.
He trying to trick me, bro.
All right, like 3.
It's
2.
gonna say it.
Yeah, right now we're about to find out. 3, 2, 1. Bang. You're right.
I'm up.
Okay,
You got me.
Okay, but
Did you know already?
Yeah, of course.
Oh yeah.
Yeah, I went back and I found. Okay, but like you're seeing the importance of. It's the same thing that I've been teaching you.
Yeah.
I look for the
Because it
trend
was bullish, you have to buy when it's bullish.
Yeah, you buy when it's bullish, you buy the support, and you have the rejection, and that's it. Trade goes up.
Okay.
Really
Now,
is it?
what if I had the candlestick, the big one?
The engulfing, same thing. Look, if
Still I'm buying.
yeah, correct. If you see here, that's the engulfing. You could have still entered off of the engulfing, for example.
And I'm only buying because it's bullish.
Yes.
So I know it already.
Correct.
I'm an expert.
Yeah. No, you're not an expert. Yeah, you're getting there. Yeah. But that was really good. That was really good for your first time. All right. Let me find you another example. All right. Right now you're 1 zip, so you're up right now.
Yeah.
All right. Let me find you another example. So, for example, this marker right here, I'm going to assist you once again. I'm going to give you this little help right here.
Yeah.
This little market structure help. All right. So, is this market bullish or is this market bearish?
Bullish.
Okay. Where's the higher high and higher low? 1
All right.
and 2. You sure? The higher high is number 2?
Oh yeah. Oh yeah.
Higher high is number 1 or number 2?
2.
Yeah. I was trying to trick you, but you.
Yeah, high is number 2, right?
Yes, correct.
And then the higher low is this.
No. The higher low would be this.
Oh,
Higher
okay,
low,
okay,
higher.
okay,
Yeah.
okay.
So right now we're bullish, right? So we would put our area of interest and we would start working our way down. And then boom, what do we have here? We have,
Higher area of interest.
yep, we have 1,
2, 3.
1 right here, 2, and we have 3.
Yeah.
So we're bullish and we're at a valid area of interest, right?
Mm-hmm.
Okay, cool. This is where we are right now with price. What do we have here? So if we're bullish and an area of interest, all we need is our entry signal. Our entry signal is either a rejection or an engulfing. What do we have here?
Engulfing.
Where is it?
Is that an engulfing though? Because the point is at the bottom.
I don't know. It's okay to make a mistake.
Do it, eh? It's right there.
So you're saying the current candle is an engulfing. That means you're ready to enter the trade off of the area of interest when it's bullish?
Dang, chat.
It's okay to be wrong.
Nah, I ain't gonna enter that one.
You don't want to enter this one.
Nah.
Okay, that is actually a great decision that you can make. That's a great
Because I'm
decision.
not sure on it.
Yeah, yo, bro, dude, that's fucking amazing, bro. Yo, I'm not kidding.
You got me locked there.
I'm telling you, I'm not kidding. Like 99% of people will be like, you know what, F it, I'm just gonna jump in it. You know?
Yeah, the other one I was sure on, this one.
You're not sure on? Okay,
I'm not
cool.
sure on.
But if you would do something, what would you do? Because you can just hypothetically still predict the market. You don't have to enter. What would you
If
do?
I had to do something,
Yeah.
I'm saying, so we're bullish right now.
Mm-hmm.
1, 2, 3.
Correct. This would be
Yeah, I'm betting that it's going up.
You would bet that it goes up?
Yeah.
Okay. And this would be the rejection here. Okay, so you would bet that would go up. You put something like this. All right. Well, guess what?
It's going. Yeah. Oh, yeah.
Up. It went up. So you just missed out on some money.
So what would you would have bet on it?
Yeah, I would have bought. Correct.
Because of the candle.
Yes, correct.
That is a candle.
Yes, that's a bullish engulfing candle.
So why though? I thought it had the point had to be taller.
It is that candle at that point right there did engulf these last two candles. So yes, that right there would have counted 100%.
Okay, so the candle doesn't have to be like this and then have the point at the top.
No, it doesn't.
Because I'm thinking of seeing the big point at the bottom.
The wick, no, it doesn't need that.
It doesn't matter about the wick.
No.
So what's the wick? The wick is just.
It's just like the trail of price, just a rejection.
So that's an engulfing candle to the.
Correct. Yes, yes, correct. I'm telling you, that was a great decision. Like not taking the trade is a great decision.
And I still learn. Like,
and you still learn, correct.
Yeah,
so I'll give you that one as well because you're right about the trend. That's 2. All right, third one. Let's see what's gonna happen. You're doing pretty good.
I didn't think I was gonna I didn't think it was this complex.
But it's not or do you still see it complicated?
Well, no, you have to sit down. It's not hard. You just gotta sit down. If you watch this video and you lock in, it's over. Probably watch this video like twice.
Correct, yeah.
It's over.
Yeah, you just need to get experience learning the patterns, correct?
Yeah.
So here I'm gonna hook you up once again. Is this market bullish or is this market bearish? Remember, that's the first thing you always have to identify the trend.
Okay. Damn, it's confusing me. Bullish.
Bullish? Okay. Where's the higher high? 1 or number 2?
2.
You sure?
Yeah, all right. Yeah.
Okay. Where's the higher low? 1 or 2 or 1?
1.
Okay. Correct. So price is not broken below the higher low, which still makes it bullish. Perfect.
Yeah.
So now
he's almost there.
Yeah,
almost
correct. It was almost there. Yeah. This is that's exactly it. So right now, let's see. Are we at an area of interest? Yes or no?
You said, do we have an area of interest?
Yeah.
Yeah.
Correct. We have 1, 2, 3, and then I would also count this structure here, right here.
Oh, you would
4.
count that? Okay.
Yeah. So I would count that. Yeah. So we have 4. So if you notice, that is exactly what this market is doing right here. It's the same exact market, right? So right now we're at that area of interest.
Dang, so not seeing that is definitely a lot harder.
Yeah.
Yeah.
So
put it in English.
Yeah. Would you enter this trade at this area of interest, or no? Do you have your entry signal or not?
Dang, it's hard again. But yeah, I got it.
You would enter it? It's okay to be wrong.
No, I wouldn't enter it.
You would not enter it? But what do you think it's going to do? Go up or down?
It's going to go up.
It's going to go up? Mm-hmm. So you would not enter this position? You sure? You're at an area, so like you're bullish, you're at an area of interest, and you have your rejection entry cross.
Oh, that's the cross.
Yes, that's the cross.
So it doesn't matter about the last one?
No. It's just as long as you have that cross there.
Oh yeah, for sure. Okay.
You would enter it.
Is this is not engulfing, is it?
No, that's not engulfing.
Okay. Even though it's a little bit bigger than that. What makes it this is engulfing?
No. This one right here would be engulfing because it ate the last 2 candles. This one did not.
Oh, it's about the last 2 candles.
Yeah, we have to eat the last 2.
So this one ate that one, but
Yeah,
if we had 2 of these, it's engulfing.
Yes.
Oh, okay, I'm tripping. All right, yeah. So, but it doesn't matter about the last one. If we see a cross,
It's good. Yeah.
what if the cross was right here?
Well, then the trade it's been missed. You know, you have to treat it live for right now. Live for right now, yeah.
But this is the second one.
That's fine, but that's where price is right now live. Yeah.
But the price is right here though.
Yeah, but that's like right next to it. Like it's
What about the crosses right here? The third one.
Well, that third candle didn't have a cross made, so you would have to wait for the cross to be made.
Okay. So if this one right here.
Yeah, if you would be right here, no, because there's no cross. Here you have a cross, yes, and after it's like another confirmation, so it's good.
Okay. All right.
So you would enter this trade just like this.
Yeah, I'm gonna enter.
All right. So this is where I didn't teach you this, but it's okay because there's always continuation on learning. But your stop loss placement is very, very important. Wherever you place your stop loss is where you want to get out if the market, for whatever reason, goes to that area. So it automatically takes you out at your pre-calculated risk. And then your take profit is where it gets you out of your profit. Let's say you would enter this trade just like this. This price, for example, hit your stop loss and it would have taken you out, but it would have still gone to your take profit. But because your stop loss was too tight, you basically lost the trade, but you were right about the direction. So a lot of people, they do this, they make the stop loss too tight and they don't give their trade breathing room. They have to give their trade some breathing room so the trade can breathe before it gets to the take profit. Yeah. So you could be right about the direction, but the specific point where you enter,
is important.
Yeah, might be, you have to give it some breathing room.
Okay.
So technically,
I didn't have a lot of leverage.
Yeah, so you were right here about the direction of the move, but your stop loss needed to be slightly adjusted. I didn't teach you this, which is totally fine.
How do I know that it needs to be slightly adjusted?
That is based off of how big your area of interest is, how big this rejection is. Like, we'll calculate it with some tools that we have, and then it'll tell you, your stop loss should be here, your stop loss should be here.
So the area of rejection was not big enough?
Your stop loss was not big enough.
What's the stop loss?
It's where it's the pre-calculated loss before you take the trade. So this right here, it's fine. What matters here is that you understand. If you understand the direction of the market, how you place your stop loss, where that's all that's like the final part. Okay. That's like, so you, like right now here, think about it as you're getting the swing. Now you're not knowing if you run to first base or second base first. Yeah. You're gonna figure out you got to go to first base first every time. Yeah. This is the same thing. All that matters is that you could hit the ball.
We're still swinging.
Yeah, and that that you're hitting it perfect.
Yeah.
So in this example, you would be right again, but you could have taken a loss if your stop loss was placed.
Because it went down.
Yeah. So technically 1 for 2 or
2 for 1.
Not bad. Yeah, not bad. Not bad.
Yeah. Technically 1 for 2.
Technically. So that's pretty much what trading consists of. Trading consists of, let me just close it like this. So trading pretty much consists of trend, direction of the market, consists of area of interest, which is where you're interested in buying or selling, and then your entry signal. Does this make trading simpler to you? How does it feel now?
1000%.
Yeah?
Yeah, I feel like if I did this for at least a week, and if I liked it, you know what I'm saying, which I kind of do, I like to win, period. So if I was watching these videos for like a week, I feel like I could learn how to trade. I feel like I would be confident. I'd probably be too confident. I'll probably go in and try to be the next Alex G or something.
I mean, you could. I'm telling you, the most important thing is your decision.
I probably would watch this like while I'm eating.
You could.
Or some junk. Like,
see, but like that's
while I'm eating, I'll just sit down and pop a video up and just watch the trade.
Correct.
And then a week later, I'm like 10K in.
Yeah, correct.
At least.
Well, that's the beauty of the Forex market because it's open 24/5, so you can do it at any point throughout the day. If you're let's say you're working a 9 to 5,
you have more time to get better.
Yeah, and you have more. The market's open for more opportunities.
Stock is not for you.
It's 9 to 5. Let's say you get home at 5 from your 9 to 5. You can't do anything. Dang. But the other way around, the Forex market, you could get home from work at 5 and you could still trade all night if you wanted to.
That's why the Forex is better.
Much better, yeah.
Because it doesn't sleep.
Correct. Yeah.
Other than weekends.
And then weekends,
anyway,
which is better to rest, yeah.
Dang.
Yeah. So just to summarize everything just really comes down to trend, area of interest, and then the entry signal. Can you take a trade without all of those 3 lining up? Sure. It's just a higher risk trade. Can you swing? Can you get on the wave if it's raining and there's sharks in the water? Can you still surf a wave? Can you still catch one? Sure, it's just a bit higher risk. You might get struck by thunder. You might get eaten by a shark. That's all up to that person's risk appetite and what they want to do.
Yeah.
What matters is that you understand that you're at risk, that you're not naive or you're clueless to it. And that's the problem with 99% of traders. They're going in to go surf when it's shark-infested waters and the weather is terrible.
Brother, relax.
Yeah. What?
No, I'm saying they need to relax.
Oh yeah. Yeah, correct. They just need to chill. Like, you're not forced to go surf 24/7. You need to wait for the right opportunity.
Yeah.
So, you want to eat the chip?
Come on. I'm gonna do it like Shaq.
You really want to eat the chip?
Where's the chip, bro?
Oh my God.
It's the chip.
So we're here with Ashton Hall, and he says that you can eat this hot chip. This is the world's hottest chip.
Easy.
Easy?
Easy.
All right, brother. If you could eat the whole chip and not ask for water for 60 seconds, I'll give you $1,000 cash. Easy. But brother, you're cooked, brother. You're cooked, bro. Is it hot? Is it hot?
Yeah.
Wait, you're gonna eat the other half?
You can't talk. It's thing.
Wait, you don't have to eat the other half.
Where we at?
25 seconds. Yo, you ate the other half, bro. This guy is out of his mind.
I had to compete.
Yo, how hot, brother? How is it?
I think you just can't talk.
No, but is it hot? Like 1 out of
Hot
10.
straight.
1 out of 10. What do you give it?
It's the hottest thing I had before.
Yeah. Like, would you throw this on some tacos or something?
No. Oh, I feel my heart. Oh my God. It's worse now. It was chilling first.
Yeah.
When we're walking outside, I was like, "This is gonna be a problem."
Yo, if he falls on the floor, I don't think all 3 of us could pick him up, bro.
You kept looking back at me. I'm like, "Yeah, he's looking at me for the right reasons. I'm gonna fall down."
Yo, he's walking like this.
All I was thinking is, I hope that dog doesn't jump on me.
Yeah, yo, he's walking like this. I'm like, why is he walking so slow, bro? Like. Oh man, I had a great time with Ashton Hall. He did not have to eat that hot chip. That was just total decision up to him there at the end, and I'm glad that he was able to at least feel better at the end and learn something now that he didn't know previously. And that's the problem with trading as a whole, with when it comes to 99% of people that don't know what trading is or don't know about somebody that does it. They're just scared about it and they don't understand how simple it really is. And it's crazy. Like, I'm very in shock how well he learned this for his first time. Like, Ashton Hall has never traded before in his life. You guys heard it directly from him. He's never seen a YouTube video before. He's never traded demo. He's never even taken a trade, right? So this was his literal first initial start. And he has understood something that took me 2 years to even comprehend. When I was learning how to trade and going online to figure out how to trade, it took me so much time to learn stuff, filter out what didn't work, learn something again, test it, remove it, filter out, add new things. He just got it all on a 1 or 2 hour session on his first time. Like, that is so powerful because you save yourself from making so many mistakes in the markets. And that's what I do every single week with my students. This is my first time ever teaching somebody live like this and teaching somebody that knows absolutely nothing on a one-on-one. And the fact that he was able to learn that fast shows how powerful my teaching is and how powerful trading can be. Because in my community, I literally teach this, but in a much more detailed version. This is a very summarized way of teaching him how to trade. We still left out platforms, we still left out slippage, spreads, trades, pips, TradingView, brokers. Like, there's so much we left out, and you know, it's very long video for me to actually teach him that, and he didn't have to learn all that right now to learn the direction of the market, whether it's going to go up or down. But I do that every single week inside of the community with my students. I literally teach them how to trade. I share with them my exact trades, why I'm interested in taking them. They're part of a community where they can interact with other successful traders and ask me questions directly. And the most valuable of all, I get to review your trades after you take them when you make a mistake. And I wish I was part of a community like this when I got started, because I would literally know from the person that I am learning from why I made this mistake and how can I actually learn from it. And that's what I've been doing lately for the last 6 to 12 months, is really focusing more on the traders themselves, on the trades that they're taking, rather than just teaching them what something is and letting them to go figure it out. Like, I'm actually going hand on hand with you to do this. And sadly, my community is not open to everybody. It really is only on acceptance purpose. Like, if you qualify, if you're at a certain level that makes sense for you to be part of my community, I'll accept you. If you have a certain drive, I'll accept you. I just don't want it to be like I'm dragging an anchor for me to teach you how to trade, and you're basically holding back everybody else. If you really want to trade, my team will be able to determine that, and you can apply down below. If you click the link down in the description below, I will teach you how to trade. I will get you access to my community, and I will review your trades. But you need to apply first. Be as truthful as possible that you can with answering your questions, because if you're not, you simply just will get canceled and you won't get accepted. There's plenty of people that want to get in, and we want to work with the right people. But with that being said, I hope you like and enjoyed this video. Hit that like and subscribe button. If you want to be part of my community, hit the link in the description down below. And if you want to see other videos in my channel, I have a 10-hour video where I literally teach you how to trade and give you all the other stuff that I did not mention in this video right here. Just hit that subscribe button. Go check out my other videos. There's so much value just hidden inside of this channel that it's crazy. I wish I had a channel like this when I got started trading, but it's here now for you guys. It is not too late to trade. Trading will be open forever. As long as there's currencies in the world, there will be markets to trade. So don't ever think that the markets will come to an end. With that being said, hope you guys enjoyed this video. Hit that like and subscribe button, and I'll see you guys in the next one.